Okay, everybody. Hi, everybody. I think we are getting live on how to sell option premium for consistent monthly income. So, guys, I'm super excited. This is part one of the trifecta that I wanted to do for a long time. So let's make sure everybody is there. Let's everybody get situated on our YouTube feed. Here we go. Give it to Zaf. And we are live, everybody, so we'll have a little bit of a delay. I'm going to share with you, everybody, everything that I know for the past 27 years. Day trading, investing, selling, put, option, premiums for consistent income, everybody. So for monthly income, for weekly income, for cost reductions of stocks, on how to acquire assets and be part of the trifecta of income. So let me show you right now the trifecta of income and how you approach selling income to get different source of income by getting the asset and the stocks, okay, on stocks that you like anyway. It is one of the most studied, consistent strategies that you can find in the stock market, guys, to make 5, 10, 20% every year by taking less risk than day trading, less risk than swing trading. It is a consistent strategies that people use, in their retirement account to increase steadily in a consistent way their net liquidation value. So let's go deep right now in the presentation that I wanted to show you. So if you look at the trifecta of income, everybody, it starts like this, okay? So first, you sell income, right, on the stocks that you like. So you wait for your stocks to go down, 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 and you look for a support in your stocks, and then you sell income. Those will be stocks or zones, of support in which you would buy the stock anyway. If you had cash, you would say to yourself, wow, I like Apple, let's say, at $75, $95, so I want to buy the stock there. But in addition to that, you are getting paid to get your stock at a certain price called the strike price at a cost reduction. And by doing that, you're selling puts and you are receiving premiums. The market is paying you a put premium at a strike, which ideally is your support zone. I'll show you later on, and you get your first source of income. So in our trifecta machine, people always ask me, where do you plug and replug your day trading profits, And I will show you when I took a $28,000 account trading SPY, SPX to $121,000 account last year. I take that money, put that in retirement account where the money compound tax-free or tax-defer, and I do the trifecta of income strategy by starting by strategy number one, which is selling put options for consistent profit, everybody. So let me show you. The second step of the trifecta is worst case scenario, you get assigned the shares, everybody, right? And guess what? This is absolutely fine because I like the company anyway. So if the stock goes down and goes below my strike price, the worst that can happen with a put selling strategy with cash secure. So you have the cash to buy the Apple shares at 75, 90, whatever price you feel is the support. Then it's not a problem. You buy the stock, you receive the assets, and then let's say the stock continue going down. You can sell cover calls, which means you make a second source of income, and you make a third source of income because if you pick a stock that has a dividend, you collect the dividend. So I repeat, trifecta of income, machine, you sell the puts on stock that you like to own anyway. You get paid to do so, right, at the strike price. You do it at a support level. It goes down, You get assigned. If you get assigned, it's a beautiful thing. You have the asset. Now you have the asset. You can create other source of income. So when you have the stocks, it's an asset like owning a house, right? And now, if the stock continues going down, you can continue selling cover calls, or even better, it goes back up to resistance. Now you look for day trading zones. We use our tool, day trading zones, full pro tool, or retail tool resistance. And now we sell at the resistance level, whatever resistance you use, the cover calls, and you sell calls. Now you are getting a second source of stream of income. And then the third stream of income is every quarter you are getting the dividend. Okay? So if you are one of the lucky one, right, that got a lot of profit day trading like we did last year, took a $28,000 account. Remember, if you want, check these videos on YouTube, see how we use $10,000 to $42,000 and $28,000 to $121,000, not once, but twice last year, day trading SPY, SPX mainly, and tech options, technology options. Then what you have to do is recognize that those are very binary moments in the market. The market is not going to give you 4 times your money. This is a home run. And if you are smart, you take that money from 28 here, right, to $121,000 a year, and you plug it back into the trifecta of income by selling put options. So let's go over the steps to help you selling put options, and I want to help you doing this. And let's take an example for Apple, for instance, okay? So let's say I look at Apple or Facebook. Let's look at a Facebook. And we're going to take our retail tools. We're going to pull a weekly chart. And we are going to look at, let's look at Facebook. That's So if you look at Facebook and you look at the double cloud tools, retail tools of our community, you see that I see that the Facebook is very good at 195 here. Very strong support at 195 and very strong support here at 240 area. So I have two choices. I look at the support, whatever support you use, this is a main key of success of selling consistent options for profit and buying your stock at the right place. Because if you get assigned the stock at the strike price, you want to be sure you get assigned at the right place. So look here, I like the 240 to 195. So I go to my option chain. Let's see if I can find that somewhere. And let's see. Looking for my option chain here. And we go here on Facebook. So now I go 40 days, like let's say I want a monthly income, so I go at about 36 days, right? And I look at the 240 call at the support day trading zones. The stock menu right now is at about 266.49 at the close tonight. So look, if I was to do the selling option strategy, and I think that Facebook is a good buy at 200, 195, or 240, I could sell either at 195 or 240. I probably don't have any premium at 195 because, as you can see here, at 210, I have only 41 cents. It's not enough money to take the risk. But here, I'm like, okay, I could sell one contract, so I become the casino, and I'll show you why selling options is the bomb. I will show you why. In the option component that we discussed last week, remember there's real value, implied volatility, and time decay in an option. I will show you that when you sell options, and especially puts, 3 out of the 3 components are going in your favor. Wow. 3 out of the 3 components in an options pricing goes in your favor on the rebound from support. So I'll show you that in a little bit. But first, we pick up the strike. So we pick up the strike and we say, okay, 240 seems to be a good support on Facebook, so I'm going to sell this one. And let's say you sell this one between 235 to 299. Let's say you sell it for about 250, the min. So you get $250 on one contract. One contract equal 100 shares, right? So if you get assigned, if it goes lower, and it goes below 240, they are going to assign you the 100 shares at 240, right? And you own a great company like Facebook that has consistent earning growth, good return on equity, good margin, choose if preferably you can have also a company that has dividend because it provides you the fourth source and stream of income that I was talking about. Now you make $250. So look at this, $250. Now, if I go, so let's go here and let's go here and let's go to 250 here. If I press here, sell, right, and confirm, look what it tells you. It tells you that you can make $235, but in our case, we take the mid price, $250. Your max loss, it's not a max loss, by the way. It is the cash requires for you to buy the stock back. As a matter of fact, the only power reductions that they give me is $2,800, okay? So be careful. This is not a max loss. This is the cash that you need to come with if you get called, if you get assigned the stock, which, by the way, getting assigned is not a bad thing. It's a good thing because you're getting an asset like your house. And with that house, you could put tenants and rent it again by doing what? Rinse and repeat. Now you sell cover call at resistance, plus you collect dividend. So you do it again and again. It's a fantastic way to accumulate stocks at the price that you like. It's a fantastic way to accumulate the stock at the price that you like, minus a discount. Because why? Because here's what happened. If I get a sign at 240, my cost basis is 240 minus the 235 that I receive here, the put premium, selling the put premium that I receive. So essentially what happened, I have a 1% discount in my purchase price. So I have an instant cost reduction in purchasing Facebook. So instead of buying Facebook retail at 240, right there, yeah, I get 240 minus $2.35. So my break even is really 237.70 or 237.65. And at that point, 275, sorry. And at that point, everybody, right? No, 65. At that point, that's your break even, 237.65. If it stays between 237.65 and 240, which I think is a good price, you're not losing money, right? And even if it goes down, 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 right? You have an asset again that is a great company in which you can sell cover call and reduce again and again and again. So the trifecta of income is a great strategy to do in your retirement accounts because you sell puts, right? In retirement accounts in places where those returns are going to compound tax-free in a Roth IRA, for instance, or tax defer in an IRA for a 1K or defined benefit plans. Now, let me show you why this is fantastic of a strategy too, and a really strong, solid strategies that intelligent investors do on the long-term investing pyramid and your long-term investing accounts, okay? Now, let me show you the power here of options. So we talked about that last week. Let's say I sell a put option for $1. So I sell a put option for $1. And let's say that put options, so the market went down, went down, went down, went down, went down. So market down, fear up. When the market is down, the fear is up in the market, which is your VIX, which is your implied volatility in your option, which means market down plus fear up equal what? Pumped premiums. Premiums are pumped. It's the best time to sell your put options at or close to the support of your day trading zones or your own support and resistance that you use, but your support. So when you're at support, market down to support, right here, fear up, IV up, premiums are jacked. Look what happened. So let's say I sell these that are options, put options for $1, okay, of any stocks at support. Look what happened. So now I am at support, the stock goes across, recross, retest higher low, and start flying back up. And let's say this is the Facebook at 240, and now it goes back all the way back to resistance 257. Let's say that's your next resistance. Look what happened to your $1 option. Look what happened. The real value is going to jack up because you're in the right direction, it rebounds. The time decay in the options that you just sold, right, is going to go what? Down to 0, because the IV is going to go down. The fear will subside and complacency will return in the market, right? So IV down, time decay to 0 to expiration. Remember, options have a time decay like this. It starts here and it goes to expiration. So let's say you sell a 30 days to expiration options. And so they have 30 days to go, 30 days, 10 days, 5 days, 0 days. At 0 days, the time decay component of this $1 option is worth 0. So look what happened. The 50 cents is at 0. The IV is at 0. All is left here in the put is the real value, but we are selling put. So when you are selling put, right, you're selling put options, right? The put options, when the market comes back up, goes down as well. So everything goes in your favor. The value of the put goes down, the IV goes down, it's in your favor, and guess what? The time decay goes in your favor. So the three components of an option are going in your favor. And that pushes here the options as close as possible to 0 at expiration, everybody. So selling options at support is a great strategy because it's unlike buying puts and buying calls, where you have only 1 out of 3 or 2 out of 3 of the options pricing going in your favor. In this case, everything goes in your favor. And that is super powerful, everybody. Okay? It is super powerful. So this is, I hope, opening your mind, and it's helpful for you. If it's helpful, your likes and your comments are super appreciated on YouTube, because this is one of my first part of the trifecta of income. Sell the puts, remember, selling put for monthly options, weekly passive income, monthly income. Get the stocks. If I don't get the stocks, I just get the income. Get the stocks, get the asset, then I rinse, repeat, and sell. I do the opposite. I sell the cover call at resistance, which I will address in another video. So again, guys, this is super, super powerful because you make some decent rate of return. For instance, if we go back to the option chain, let's say I'm selling at 43 days for March, my 240 here, support on Facebook for $3.10. So let's think about it. $3.10, I make $310. $310 on one contract, right? But look at the buying power effect. It's 26.96, guys. So I make almost 10% return. I make almost 10% return in this strategy in 43 days. So remember, the goal of everything that you should be thinking when you sell options, especially any kinds of options to be wealthy, it's the Warren Buffett 20%. If you make 20% return every year, on a little account, like a Roth IRA, and you take $6,000, you start with $6,000 or $5,500 here on my compounded calculator on your Roth IRA, and you add $5,500. And by the way, that's not the end of the world. My son is 16 years old. He worked all summer as a lifeguard, and he made almost $4,000. So if my son at 16 years old can make $4,000 the entire summer, you guys can make money as well. Everybody, if you are diligent in your expenses and your income and the way you trade your cash flow, right, you should be able to save the maximum contribution in a Roth IRA. So if you contribute the max of $5,500, now it's $6,000, and you add an additional $5,500 every year at a 20% rate of return for 20 years, it's $1.4 million. So right now I'm 49. It means at 69, I have $1.4 million just selling put option strategies. Selling put is super powerful. Get the stock, sell the calls, get the dividend. You wrap all of this in your long-term investing, and you should be able, without promises, I cannot obviously promise you anything, but over time, people who have a lot of experience to do that, they average at least 7% to 30% per year if you do it properly. The trifecta of income is very powerful. Selling put options for monthly passive income, and you can do it weekly, quarterly, you can choose 6 months out, so long your rate of return at one point is going to match or beat the rate of return of Warren Buffett over 20 years. It's a beautiful strategy to take your day trading, your risky day trading rate of return stuff that you do on SPY, SPX, like we've done last year, 10,000 to 42,000 or 28K to 121K. I take this money out, and now I play with the casino's money, which is not mine, and I reinvest it in the trifecta machine of getting put income, selling put premium, getting the stocks, selling the cover call, and eventually, if there's a stock that is a dividend, I get also the dividend. So as you can see, this is a very, very powerful strategy. And by the way, you don't need to do it monthly. You could do it even in a safer way. Let's go back to my chart on the day trading zones. So when I took the charts on Facebook here, let's go look here, I had a 195. So let's say I think that 195 is potentially a great support for Facebook, but I am busy, I am an entrepreneur, or I am a mom, or I have a W-2 job. You don't want to watch the market all year long, every day, every week. So what you could do, and that works too, the time decay kicks at 6 months, I could come back, we come back here again, go back to the Facebook, and instead of doing the 43 days in March, I can go and sell, guess what, the January 22. And I go to the 195 strike day trading zones here, support, which I think is a much better way to be patient. And look what I do. If you have 6 months in front of you, now it's almost a year, but if you had 6 months, now you would collect almost $1,000, wait for Facebook to come or not to your support of 195, get the asset, everybody, and you see, this is a very powerful strategies. Those are the stuff we do in our mastery program, which we start, by the way, Monday. We do the day trading, we do the selling options for premiums, and we are looking forward to having you next Monday. Few guys under my wing. These strategies will help you tremendously to go from day trading to selling put options for monthly income, quarterly income, semi-annual income. Let the stock come to your most important support and resistance, get paid for it, and you are getting paid to wait for a stock to go down and down to an attractive buy area, which is super, super powerful. So again, if this video was helpful, your likes, super appreciated, your comments, and don't forget below this video, in the description below, you can get free videos, 14 free videos that shows you how I grew up those day trading accounts with SPX and SPY. You take care, everybody, and I'll see you on the next video. So everybody on the stream, I hope it was helpful, guys. This is my quick Thursday stuff on options and wealth. Every Thursday, I'll take the time after I'm done trading, come with you guys and explain stuff that helps you grow your day trading sides with SPX, SPY, and the options, and the other side, which is your long-term, where you should have most of your money anyway, tax-deferred, tax-free strategies in options and stocks. Love you all, everybody. Thank you for being there. We'll make it more interactive next week. Next week, we're on bootcamp. We have the intensive mastery mentorship program starting, so we'll lock down the feed. They will have no YouTube stream on Tuesday morning, but we'll do a YouTube stream next Thursday at 4 p.m., everybody, and everybody will be able to engage, questions, answers, and we'll talk about income, expenses on the next video and how you do all of this. But I hope this video and this live stream was helpful on how to sell options premium and particularly the selling put premiums. Take care, everybody. Have a great day.